Hi everybody, and welcome to Narrow Path Man, authentic conversations and challenging information. I've got some challenging information for you today, alright. We're going to be looking at the interest rate, the Bank of England interest rate, and how changes to the interest rate will have an effect on mortgage repayments. And I want to just show you with a pretty interactive, easily digestible way of seeing how small incremental changes in the interest rate can actually have a rather large knock-on effect to your mortgage repayments, specifically the amount that you're paying monthly in terms of interest. So what we have here is the Bank of England policy rate in the United Kingdom since 1700. This chart shows us the official bank rate, the minimum lending rate of the Bank of England, for over 320 years. It is effectively the interest rate that the Bank of England charges banks for secured overnight lending. So the way it works is, at the moment, we have an all-time low since March 2020 of 0.1% in terms of the minimum lending rate. As a result, I'm sure you're aware, mortgages are quite low in terms of the monthly repayments that you have to make at the moment. Now, if you were to get a mortgage at the moment, typically what would happen is, say you were doing it over the course of 30 years, what would generally happen is you would have to pay approximately 3.5%, just using this as a hypothetical example, but it is likely going to be in and around a figure like that for the kind of initial period. Now that initial period will be a fixed payment that you'll be paying monthly for either 2 years or either 5 years. And then beyond that, after that 2-year fixed period or 5-year fixed period, you'll move on to a variable rate, which will effectively, it will follow the Bank of England minimum lending rate. So if it goes up, your variable rate and your monthly repayments will go up in accordance with it for the remainder of the, in this example, 30-year mortgage period. Now, what I'm about to show you, you'll not typically be shown by mortgage advisors, financial advisors, or people that work in banks, because ultimately what they want you to do is get the most expensive home that you can get currently with your current pay and current low interest rates and things like this. I just want to show you here now, just so people are aware, how even small increases in the interest rate can have quite dramatic effects on the amount of money you have to pay monthly on your mortgage, specifically looking at the interest amount. So not even anything, an increase in the interest rate, once it impacts your variable rate monthly repayment, it won't actually mean that you're paying more money off your home every month. It'll just mean that you're paying more money in interest. So in this example, we're going to use a house that's, say, £200,000. And in this example, we're going to say, just because it's quite simplistic to see, in this example, a 10% deposit is what we've used. So we've got a 90% mortgage here on the house. So in this example, right, 200 grand house, 20 grand deposit, 30-year period. Most mortgages are 20 to 40 years, in and around that region. And here we're going to use an interest rate of 3.5%. Now, what is this made up of? Okay, so we know that the minimum lending rate is 0.1%. So the other 3.4% is what the bank is charging us as a fee. So just your Santander, your, I don't know, Bank of Ireland, AIB, whatever. 3.4% is their fee on top of the 0.1% minimum lending fee. Sorry, minimum lending rate. And equally, if you're looking at this, and I know some subscribers in the United States and different countries, we're all kind of looking at similar situations throughout the Western world here. So, stick with it. But, right, okay. So here we have 320 years worth of data, and this is kind of like rough. I think this is just an average for the year, yeah. But what I can tell you is that the average minimum lending rate for the last 320 years has been 6%. Okay, so we're currently at 0.1%, and it has been that way since March 2020. Now, not saying it's a certainty, but in terms of probabilities, you would have to say that if the average minimum lending rate throughout the last 320 years has been 6%. It's the historic norm. You would have to assume that we are likely at some stage to return somewhere higher than we are at the moment in terms of 0.1% for the first time in history. It's never been lower than 2%. It was only ever briefly 2% a couple of times in the mid 1900s. But since 2009, we've been less than 1%. And as of, 2020 March, it's been 0.1%. So we're in this real sort of sticky situation where it's substantially cheaper, right? It's cheaper to own a home with a big mortgage than it is to rent. Because when you're renting, you're effectively paying more and you're not even owning the house. So what would you prefer? Would you prefer to pay more for a less quality house and you don't own it? Or would you prefer to pay less for a much nicer house that you get to call your own? Now, that answer is pretty easy. It's pretty straightforward. And especially when you look all around you, any friends or family who are in a position where they can afford that mortgage and they can get credit off banks with easy lending, relatively easy lending, everyone who can typically does avail of really large mortgages these days. And I'm not saying mortgages in and of themselves are a bad thing, but what I want you to realize from this video is that if you're really stretching yourself at the moment in terms of monthly repayments, things are only going to get more difficult whenever, if not certain, but if interest rates ever revert to type, i.e. 6% being the historical average, or even if they move up to 2%, 3%. I'll show you a couple of hypothetical examples here real quick. Okay, so in this example, we have a 200 grand house, we have a 20 grand deposit over 30 years, and the interest rate that you're paying monthly on your fixed rate for the first, say, 2 years or 5 years is 3.5%. Now, that's 0.1% of the minimum lending rate plus the 3.4% bank fee in this hypothetical example, which is approximately right. Now, in this scenario, what you're paying is £808 a month, right? Ignore this here for a second. You're paying £808 a month. The interest alone is £525 a month. That's what you're paying right now on this mortgage breakdown, okay? Now, say we're not even going back to the historic norm of 6%. Say we're going back to the the minimum lending rate increases to 3% at some stage over the next, say, 5 years, right? If this goes 3% higher, bear in mind it's at 0.1 right now. The interest rate that you're paying monthly, i.e. the 3.4% bank fee plus the 0.1% minimum lending rate, assume throughout all examples here that the bank fee of 3.4% remains consistent, remains constant, right? So if the minimum lending rate increases from 0.1% to 3%, that would mean 3% plus the bank fee of 3.4% would bring you to a 6.4% monthly repayment, okay? Now, in that scenario, look here as this changes. Again, we'll go back to 3.5. So if there's a change, at the moment in this example, you're paying just over £800 a month, right? If the minimum lending rate moved up just to 3%, you're going from £800 a month to a good bit over £1,100 a month, right? Your interest has jumped. Now, bear in mind, this is just interest. This isn't actually paying off your mortgage, but your monthly interest that you're paying, $525 a month, in this scenario, only going up to 3%. The minimum lending rate only going up to 3%. That is how much you jump up from 525 in your interest payments monthly, right? Now, lastly, I just want to show you. So this is our original. So again, 0.1% plus 3.4% bank fee, and $808 a month in total, including interest of $525 a month. Now, if we return to our historic norm, the historic norm over the last 320 years of 6%, right? Bear in mind we're at 0.1% right now. If we go to 6% plus the 3.4% bank fee, our monthly repayment jumps from $808 a month in this hypothetical example to $1,500 a month. £800 a month to £1,500 a month. And remember the interest of 525 a month, we're looking at 1410 a month on interest alone. So, like, mortgage advisors aren't telling you about this. They're telling you, oh, I don't know. They're always reactive, you see. They're reactive and they're trying to sell you. They're trying to get you on the property ladder and trying to encourage you in it. It's always reactive, not proactive. Got to look at this through a clear lens, right? Most people's mortgages are between 20 and 40 years. So at some stage over that period, the chances of the minimum lending rate coming off this insane low level that's completely unparalleled in terms of historical norm, the chances of it moving up are pretty high. And the chances, and if it moved as high as 6% to its historic average, you're looking at a wildly different, much higher monthly mortgage repayment on the same house with the same deposit over the same period of time. So yeah, challenging information, all right. Not the nicest stuff in the world to see, but definitely something that, you know, people should be considering more. And obviously you need somewhere to stay, and yes, rent's a lot higher in terms of repayments, because monthly payments, because you're not taking the risk effectively that you are, even though people don't recognize it as risk with home ownership under mortgage. But yeah, it's all tied to this minimum lending rate, and people kind of focus too much, especially when they get mortgages for the first time, on what they're paying monthly at the start. But that's only for the fixed period, and then we move to a variable rate. So something to consider, guys. Seriously, something to consider, especially with all the economic uncertainties that we're experiencing in the world today. Yeah, for more authentic conversations, for more challenging information, subscribe to Narrow Path Man. I've changed the name of the channel. The whole idea is making narrow path decisions in life. So looking at long-term smart decisions rather than short-term YOLO, which can lead you to a lot of bother in all sorts of different ways in life. Available now on all podcast platforms, on YouTube and on Instagram at Narrow Path Man. Many thanks. God bless. Keep the faith. See you later.